Imagine this. You have just $100 in your pocket. It doesn't sound like a lot, right? Most people look at that amount and think, there's no way I can turn this into something meaningful. But what if I told you that this small amount of money, if invested smartly, could realistically grow into $10,000 by the end of 2025? Sounds like a dream, maybe even impossible, but it's not. The key is understanding how to invest strategically, making small, smart moves consistently, and leveraging tools that most beginners completely ignore. Hey there! I make videos that help everyday people grow their money smarter and faster. I show you ways to invest, save, and earn without unnecessary risk or complicated strategies. In this video, I'm going to give you a complete roadmap to take $100 and step-by-step turn it into $10,000, and stick around because at the end I'll reveal a bonus strategy that could double your results without adding more risk or effort. Now let's start by understanding why $100 is actually enough. Many people think investing is only for wealthy individuals or people with thousands of dollars to spare. That's a misconception. The true power of investing lies in compounding. Compounding simply means making your money work for you, allowing your earnings to generate even more earnings over time. Even small investments can grow exponentially if you give them time and reinvest your profits consistently. Let's take an example. Suppose you invest $100 in an asset that grows 10% per month. That might not seem like much at first, but after 12 months your $100 could grow to over $300. Now imagine continuing this investment pattern for 24 months. That same $100 could grow to close to $10,000. This is not magic, it's simple math powered by compounding. The key takeaway here is consistency. The people who fail are typically the ones who panic, withdraw their money too soon, or try risky investments without a plan. Investing is a long-term game, and small, steady moves consistently outperform risky emotional decisions every time. So where should you put your $100 to achieve this kind of growth in 2025? Let's break it down. First, fractional stocks. Many beginners think they need thousands of dollars to buy shares of companies like Tesla, Apple, or Google. That's not true. Fractional shares allow you to invest as little as $5 or $10 in these companies. Over time, as these companies grow and increase in value, your small investment can also grow significantly. For example, imagine putting $50 into Apple today. Apple might grow 20% over the next year. That $50 becomes $60. It might not seem huge at first, but combined with other investments and monthly contributions, it snowballs into something substantial. Fractional investing makes it possible for anyone, even with a tiny budget, to participate in the growth of major U.S. companies. Second, ETFs or exchange-traded funds. ETFs are essentially baskets of stocks, meaning you invest in multiple companies at once rather than picking a single stock. For example, QQQ tracks the top tech companies, while SPY tracks the S&P 500 index, which represents the 500 largest companies in the U.S. By investing $30 in an ETF, you spread your risk across many companies while still participating in the market's growth. This is particularly helpful for beginners because you don't have to worry about choosing the right individual stock. The fund does that for you automatically. ETFs have been one of the most reliable ways to grow money steadily over time. Third, high-potential cryptocurrencies. Cryptocurrency can be risky, but if approached carefully, it can also offer high growth potential. For example, allocating $20 of your $100 to well-established coins like Bitcoin or Ethereum, or even a small portion to promising altcoins, can yield substantial returns. The key here is to keep your allocation small and only invest money you are willing to risk. Crypto should never make up your entire portfolio, but as a small portion it can complement your other investments and accelerate growth. Fourth, micro-investing apps and peer-to-peer lending platforms. Platforms like Acorns, Fundrise, or Robinhood allow you to invest small amounts regularly, often using spare change or micro-investments. This strategy automates investing, making it easier to build wealth consistently without actively thinking about it every day. Think of it as set it and forget it. Over time, these small automated investments can add up to hundreds or even thousands of dollars. Pro tip: diversification is your friend. Never put all your money into a single investment. Spread your $100 across multiple investment types. This protects you from losing everything if one investment underperforms, and it maximizes your growth potential. Here's a step-by-step plan you can implement today. First, open a brokerage account. Popular US-friendly options include Robinhood, Webull, or Fidelity. These platforms are beginner-friendly, easy to navigate, and offer zero-commission trading. Once your account is set up, decide how to allocate your $100. The balanced approach could look like this: $50 in fractional stocks, $30 in ETFs, and $20 in high-risk, high-reward assets like cryptocurrencies. This mix balances growth and risk while giving you exposure to different types of investments. Next, reinvest your earnings. This is a critical step that many beginners overlook. Don't withdraw profits. Let compounding work its magic. Even small monthly gains can grow significantly over time when reinvested. Track your progress every 3 to 6 months. Adjust your allocations if certain investments are underperforming or if new opportunities arise. Staying consistent and monitoring your portfolio ensures you remain on track toward your $10,000 goal. It's also essential to avoid common mistakes. Don't panic sell during market drops. Avoid chasing get-rich-quick hype, which often leads to losses. Never invest money you cannot afford to lose. The most successful investors focus on long-term growth, not short-term excitement. Small, steady steps guided by smart planning always outperform risky emotional moves. Here's a bonus tip to maximize your gains: dollar cost averaging. Instead of investing all $100 at once, consider investing small amounts weekly or monthly. For example, invest $10 each week. This strategy minimizes risk and allows you to take advantage of market fluctuations. Even small regular contributions can compound into significant wealth over time. If you want, I can create a follow-up video showing exactly which stocks, ETFs, and cryptocurrencies to buy in 2025 to make $10,000 from $100. Hit that like button and subscribe so you don't miss it. Comment below if you'd like me to make that step-by-step portfolio for you. Remember, growing your money isn't about luck, it's about smart, consistent investing. Start today, follow this plan, and watch your $100 transform into $10,000 by 2025. Thanks for watching, and I'll see you in the next video.